Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer, Lee Munson. Lee, great to see you. Good to see you this morning. Thank you for being here. I want to get your expectations on third quarter earnings. What do you think?
Well, tomorrow's going to be a little bit of an interesting day because we've got Bank of America and Citigroup that earlier this year, analysts have started lowering their expectations. So now with that low bar, I hope Bank of America and Citigroup really knock it out. I want to hear the comments from these banks. I even want to hear from Morgan Stanley. It's so important that we get some information about the U.S. consumer because I think when we look at some of the other reports that are going to come out this week, I want to see confirmation. So I think it's a little less about how the banks are increasing their loan books and how much they see consumer spending continuing going forward. Then, we've got Netflix on Thursday. We don't really think of Netflix as a big consumer bellwether per se, but I'm very interested in the light of them hiking their prices, what management thinks about the U.S. consumer and whether they can really continue subscriber growth with higher prices. I think at the end of the week, we're going to know a lot about the consumer more than anything else.
Yeah, we'll get a good window into the macro story, certainly. We already heard a little about it from J.P. Morgan. But, Chris McMahon, jump in here because I also want to know more about the capital markets in the third quarter. That will inform me on what? Morgan Stanley and Goldman Sachs. Chris McMahon, your thoughts?
Maria, some of the banks, we were talking originally about a hard landing. Now you're hearing some people say soft landing and a few people saying maybe no landing at all. And we're very worried about inventories. I was going to hopefully get some feedback from Lee about this. We're so worried about inventories, heavy equipment inventories. 45% above where they were last year. New car inventories, 35%. Most dealerships have 18 months of inventory. Lee, should we be concerned about this? What is this going to do with the equity markets over the next 12 months, do you think?
Well, I think that with the lowering of interest rates, we're going to see if we're going to get all that inventory moved out. I think that overall, I'm still bullish on the economy. I'm still bullish going forward. I think that there's more and more people are getting in this no landing situation. I think we're going to see an expansion next year. Here's the problem with sentiment. We're at an all-time high and we have very low sentiment. And I think that's primarily because of valuation. So also, when you look at profits across the board, we've got 50% of the largest companies in this country raising their estimates and raising profits, but 50% of the companies, let's just call it the S&P 1500, have lower earnings. So this is a big issue. We've got the haves and the have-nots. And of course, we know about the top 10% of the largest companies. They just keep winning. So I think we're going to have to see, is there going to be follow-through in the broadening out? We're seeing small caps trying to rally. I think that's the market saying we're going to see, like you're saying, inventory is coming down. The consumer keeps spending. And I think overall, when you look at the bond markets, we got a 10-year at a 4.1. Clearly, there are investors thinking we're going to get growth next year, not a hard or a soft or whatever. And as you see that 10-year tick up in yields, that 10-year is always about growth expectations going into next year. Bond markets are telling us things are going to be not that bad.
Yeah, well, President Trump is talking all about growth. That was his focus in our interview, which we'll hear more about coming up. And don't forget, we'll get retail sales out on Thursday. That also a good window into the consumer. But I want to get your take on oil. Oil prices are pulling back this morning, but oil is up better than 10% just last week as we await Israel's retaliation against Iran. When I spoke with former President Trump yesterday on Sunday Morning Futures, we addressed the state of oil. Watch. Is China buying all the oil from Iran and basically complicit here and supporting Iran in its efforts to attack Israel?
I don't blame China at all.
You don't?
Well, I told China don't do it, and they didn't. I said, if you do it, you're not doing any more business with the United States. And
what? Buy oil from Iran?
But nobody's telling them that.
So right now, you've got Iran buying oil from, you've got China buying oil from Iran, Lee, and that's enriching Iran and having them able to attack Israel and support these proxy terrorist groups.
Well, absolutely. I think that we're going to have this situation no matter if China's going to buy oil from Iran, somebody's going to buy that oil, whether it's at a discount or not. We saw all through this war with Ukraine how there's always going to be a marginal person who's going to buy oil from any place that they need to, just like people are buying commodities from Russia. I think here's what people have to remember. With commodities, the way commodities trade, let's remember, unlike the stock market, commodities move only when the event happens. Right now, going into this this month, we have the biggest premium in oil options markets that we've had in years now for bullish bets. That means you have traders all around paying high premiums, betting there's going to be a surge in oil, but we're waiting for that response. We're waiting for that trigger event.
Do you believe it's going to surge? Do you want to buy oil stocks here?
No, I don't, because I think anything's going to be mostly short-lived. Okay. Because even if we get a short-term move, great, let traders have their little pop. But I think overall you're going to see oil really, $80 or less in that sort of natural market, just because of what kind of industrial production we have. I think I would be concerned if we saw oil rise up above 80, not because of the geopolitical, but because of increased consumption. That would cause me to be nervous about inflation next year. So I don't mind a surge on geopolitical. I mind surges on fundamental reasons, which means we're heating up too fast. We could go a little too far, get that kettle a little bit, get overflow. We could have the Fed not cut at all. Those are my concerns going into next summer, along with the remilitarization because of the wars over in Europe and the Middle East.
I agree. It's a demand story if we see oil on the move. Lee, it's good to see you. Thank you, sir. Lee Munson joining us this morning on Markets. We'll see you soon. Stay with us. We're coming right